Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for July 24, 2020. Today we're taking a look at the AUDUSD, the Australian, versus the US dollar for today's trade analysis. Of course, as we've been studying all week long, the US dollar has been in a significant push lower, a significant downtrend. That has driven pairs like the euro dollar and the pound dollar and the Australian dollar higher into new highs. But today we see a little bit of a pullback here on the Australian dollar, is pulling back down into support, which potentially gives us some opportunities to buy at a lower price before it returns to the uptrend. Now, of course, it could continue to go down and we could see some retracement lower again. But if we're going to buy in the direction of trend, it's always better to buy something at a lower price. And that's where we are now. We've come down into a lower price. We've come down into a support. So we're going to watch for opportunities to buy in the direction of trend, keeping in mind there's always risk that the trend turns around. If the dollar suddenly takes a strong move higher, that may drive this back down a little bit. But we'll keep an eye on that and use appropriate risk strategies in every trade scenario. And in this case, the Australian dollar is an uptrend. Blue trend line shows that on the left-hand side. That's not too hard to see. We have come back down yesterday and today into support. Let's zoom it in one time on the daily time frame here on the left-hand side. And in doing that, let's actually go in twice. There's the pullback here. We've come back down into this support level. Let's take one simple fib range. Let's go from the low down here, the last time it touched the green zone, to our current resistance high. And this happens to be top of the yellow shaded area at the 0.382 Fibonacci retracement level. So we now have some evidence of Fibonacci support here into the yellow shaded area as well. 618, by the way, same fib range, sits down here at the green zone. So that's a possibility as a support zone, as well as the 618 is down here 70, 21, 20 area. So we're looking at the 382, 70, 80. 0.7065 is the yellow shaded area. Potential support here. The risk again is that it breaks down under the yellow zone and goes back down to the green zone. Now on the way up, of course, if it does turn around, we look at the blue zones, 0.710520 as our resistance, and of course the orange zone as it continues to pressure higher, if it continues to pressure higher. I think that's a pretty good plan for the day today in the direction of the trend. Take it down to the 4-hour time frame, and here we are looking at it settling down here into that yellow zone. Past couple of 4-hour periods already finding some support right here into the 70, 80, 70, 65 level. You can see the current candle with the spike wick down to 65 and then coming right back up into 80. So again, showing us that the market is responding to this level, the yellow shaded area, as support. I mean, you can see just the past 3 4-hour periods, current one included, have found support here. So we see the market actually making that response of support here at this zone. So it gives us an opportunity to watch for reversal to go back up in the direction of the trend. Again, the risk is a breakdown of the yellow zone. Stop loss, if you decide to take the long, is going to be underneath the yellow zone. That way, if for whatever reason the market decides to continue to go down, you can limit the impact to your trading account, get out and find something new, maybe even a breakdown of the yellow zone to go short to the green zone. But that's not happening yet. Again, I think if you're going to go short, you probably want to break that yellow zone first, or maybe even make that rally back to the blue zone before you would go short. Trend though, long-term trend, not the short trend, but the long-term trend is bullish, and if we focus on that, that should give us a directional purpose to our trading. Again, I'm looking for more long setup here. Just to give us one clue for entry, we look at the volume indicator on the right-hand side, and you can see where the blue and the yellow shaded areas are on the right-hand side. If I squeeze in, you can see how that plays out. Right now, we're at the yellow zone. You can see it's dipped down in here a couple of times now. Turned red, dipped down, a little bit of white, neutral trend dots, and then it turned red again as it dipped back down, and now it's currently neutral and white. So really what we're looking for now is for top to bottom. We want everything top to bottom to turn bright green. We want the trend dots here to turn bright green, giving us a clue that higher bullish volume is coming into the market. We want the heat map to turn bright green, giving us a clue that higher bullish volumes coming in. We want the volume down here to be bright green and gives us a clue. So green top to bottom, bright green top to bottom gives us a higher clue that bullish volume is coming back in from the support zone, the yellow zone. We're going to target back to the blue zone or higher in the direction of the trend for the Australian dollar. The risk, pretty clear. We just don't want it to get through the yellow zone today for the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.